Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a filing from Apollo Debt Solutions BDC. It sounds boring, but stick around because we're going to see if Apollo's debt is actually a problem or a goldmine waiting to happen. Get ready to find out what the numbers really mean. This document, filed with the Securities and Exchange Commission on April 15, 2025, is a post-effective Amendment 912 to their registration statement. Think of it as an update mostly to include some exhibits or supporting documents. To their original filing, it doesn't change the core information, but it adds more details to the story. This amendment is filed under a specific rule that allows it to become effective immediately. They're essentially saying, hey SEC, here are some extra documents and we're ready to go now. It's like adding extra toppings to a pizza that's already in the oven. Now, let's get to the meat of it, the exhibits. These are like the appendices in a book filled with contracts, agreements, and other important documents that support the main story. First up, we have the financial statements. These are the scorecards that show how well Apollo Debt Solutions BDC is doing. We're talking about things like their assets, what they own, their liabilities, what they owe, and their income. Let's zero in on the consolidated statement of assets and liabilities. This is a snapshot of what the company owns and owes at a specific point in time. In this case, the end of 2020, 23, and 22, and 2022, 23. And 2022 and 22, giving us a year-over-year comparison. But before we dive into the numbers, it's important to note that an independent accounting firm has reviewed these financial statements. This firm is like a referee, making sure the company is playing by the rules and the numbers are accurate. This gives us some confidence that we can trust the information. Looking at the consolidated statements, one of the key numbers is total assets. Essentially, it's everything the company owns, like investments and cash. It's a big number, but the real question is, are those assets performing well? We need to see how much debt the company has. It's important to compare the assets to the liabilities to get a clear view of their financial standing. Are they able to pay back those liabilities? Next, the consolidated statement of operations shows us the company's performance over the past year. It's like a video of their financial activity showing how much money they made and how much they spent. It lets us see if the company is making profits or losing money. One key line item in the statement is total expenses. This tells us how much it costs to run the business. Are those expenses growing faster than revenues? If so, that's a red flag. The bottom line on the statement of operations is the net increase in net assets resulting from operations. This is the profit or loss for the year after all revenues and expenses are considered. A positive number means the company made money, while a negative number indicates a loss. Moving on, the consolidated statement of cash flows is all about tracking the movement of cash in and out of the company. Think of it as a bank statement for the whole business, showing where the money is coming from and where it's going. One of the critical figures here is net cash provided by operating activities. This tells us how much cash the company is generating from its core business. If this number is consistently positive, it's a good sign that the company can fund its operations. The exhibits list is extensive, ranging from their declaration of trust to various agreements. Let's touch on a few key agreements. The Investment Advisory Agreement is a crucial document. It outlines the relationship between Apollo Debt Solutions BDC and its investment advisor, who manages their investments. The agreement dictates how the advisor is compensated and what their responsibilities are. The administration agreement details who handles the day-to-day operations. Understanding these agreements can tell you if the company is potentially wasting money or saving it on its management expenses. Then there are various loan and credit agreements that are present. These outline how the company borrows money. It also can show where they are getting their money and the interest rate at which they are getting it. Finally, the Code of Ethics outlines how the company should operate and what kind of conflict of interests are forbidden. It might sound boring, but the rubber hits the road when there's a bad apple in the company. The filing also discusses marketing arrangements. These details the company's plans for selling its shares and reaching investors. This is essential for understanding how the company plans to grow and raise capital. The table outlining the expenses of issuing and distributing securities gives us insight into the costs associated with raising capital. These expenses include SEC registration fees, legal fees, and printing costs. The filing lists the number of holders of different classes of common shares. This gives us a snapshot of who owns the company and how ownership is distributed. The section on indemnification outlines who is protected from legal liabilities. This is important for understanding the risks and protections for the company's leaders and officers. This section reveals potential conflicts of interest. Do the executives have outside interests that might influence their decisions at Apollo Debt Solutions BDC? This is where the company's financial records are kept. While not exciting, it's a necessary legal disclosure. Finally, the company makes certain undertakings. These are promises to update the registration statement with new information. This ensures investors have access to the most current data. Now let's take a step back and assess Apollo Debt Solutions BDC. The company seems to be actively managing its debt and seeking new funding opportunities. The numerous credit agreements indicate a reliance on borrowing, which can be a double-edged sword. It fuels growth, but also increases risk. Their expenses are a potential area of concern, as they need to ensure they're generating enough revenue to cover those costs overall. Apollo Debt Solutions BDC presents a mixed bag of opportunities and risks. The key will be how effectively they manage their debt and leverage their investments to generate sustainable profits. Thanks for watching. If you found this Decoding helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. What company would you like us to decode next? Let us know in the comments below.